Ever wondered why the US stock market, once brimming with record highs, suddenly seems to be cooling down? It's like a summer's day that's taken a sudden turn. The buzz of the market, once filled with the heat of soaring stocks, is now experiencing a slight chill. This shift has triggered a flurry of questions and a pinch of anxiety among investors. Are we on the brink of a larger correction, or is this just a temporary market adjustment? Let's delve deeper into the reasons behind this cooling trend. Several factors are contributing to this chill in the market. Let's start with inflation anxieties. Investors are keeping a close eye on rising inflation, concerned about the Federal Reserve's potential response. If the Fed raises interest rates to combat inflation, we could see a dampening of economic growth and a hit to corporate profits, which could send stock prices tumbling. Next up, we have interest rate jitters. The mere anticipation of rising interest rates can make stocks seem less attractive compared to bonds, which offer a guaranteed return. This could prompt some investors to shift their investments. Geopolitical tensions are also playing a significant role. The ongoing war in Ukraine and other global conflicts are creating a climate of uncertainty and risk aversion in the market, making investors hesitant to put their money in stocks. Lastly, there are valuation concerns. After a long bull run, some sectors of the market may appear overvalued, and a correction could be underway to bring stock prices more in line with company fundamentals. But does this cooling market signify a crash? Let's explore the possible scenarios. A cooling market doesn't necessarily mean we're heading for a crash. What we might be looking at are a few possible scenarios. The most likely is a short-term correction, a moderate decline followed by a rebound. It's like a breather after a long run, nothing more. However, if economic concerns intensify, we could see a prolonged cooling. That's a longer period of sideways movement or even a slight decline. Now, we can't rule out the bear, a sustained market decline of 20% or more from the peak. But predicting that is as tricky as guessing the weather, so what's an investor to do? Think diversification. A well-mixed portfolio of stocks, bonds, and real estate can help weather the storm. Keep your eyes on the horizon and maintain a long-term perspective. Regularly rebalance your portfolio to align with your risk tolerance. And when in doubt, seek professional advice. Remember, the key to weathering a cooling market is staying informed and making sound investment decisions. So what's the bottom line here? The US stock market is cooling down, but don't let this cause panic. Remember, market fluctuations are part of the game. It's crucial to keep a long-term perspective, diversify your portfolio, and consider rebalancing to maintain your risk tolerance. If you're feeling uncertain, seek professional advice. With a balanced perspective and focus on long-term financial goals, you can navigate the cooling market and potentially benefit when the market rebounds.